the S&P 500 daily cloud chart. And if you've been tracking along, you haven't gotten caught with your pants down. So I'll zoom into the current area now. And price closed right above the top of the cloud. So the top of the cloud to start the day on the 17th is at 4420.22. And here's the lagging line, and the baseline for tomorrow will be at 4389.23. So if the lagging line has a hit on the baseline, that will mean that price is going to have a hard time getting above the cloud. So we'll have to see what happens, but that's usually what happens. And price in the aftermarket hours for the S&P 500 at 7:01 p.m. Central Time on the 16th is 44.02. And the Channel 3 low is at 43.85. So that kind of coincides with where the lagging line might be tomorrow when it hits the baseline 26 bars back. And the Bollinger Band lower band is at 4414.70 to start the day on the 17th. And the lower Stark band is right there by the Channel 3 low, so you would think that that will be some pretty good support with this and this, so we might see a bounce. And if price makes it back up out of the cloud above that level for tomorrow, that's somewhat of a show of strength, and keep blasting to the upside and get above this ongoing supply line, which for the 17th will be at 4487.52, and close above that will be qualified for this ongoing supply line. And the trend factor down 1, along with the propulsion momentum down for 50% and 100% were both qualified and confirmed. And price nailed the 50% qualified and confirmed exhaustion down, so the indications are for more downside price action. So get above 44.20 for tomorrow on the 17th from that top of the cloud, and that's a good show of strength. If it keeps heading downwards, right out of the playbook for buying would be to start buying at this disqualified trend factor down 2, and hopefully it won't become qualified and confirmed, then just heads down a little further, and then we'll be in the 4200 zone. And you can see the previous video for all those levels there. Not much has changed, and we'll show it again. It's quite important. So the bottom of the cloud is at 4282 over here on the lower left, and the target is this D wave up 4 for the 61.8 Fibonacci retracement projection for D wave up 4 there. So that's the goal, and you can see trend factor down 3 is below that, so our buying could be completed after starting at trend factor down 2, and then just keep buying, see what happens at the pitchfork 1 level, 4250, and that's about it. And then buy more here. So the plan is to buy a 25% buy. So if you have a 100% level for buying where you go all in, let's just say it's $100, you would buy 25% 5% here, trend factor down 2. Again, hopefully it does not become qualified and confirmed, then just keeps heading down. And then 50% buy, maybe around the daily arc 0.382, 4260.46, or the pitchfork 1, 4250.32. And then when it hits the D wave up for 61.8 Fibonacci retracement level at 4243.12, then buy a 100% stake. And if it does make it down that low and heads a little further than that 4243.12, see what happens at this qualified and confirmed 100% propulsion exhaustion down at 4220.49. Hopefully it does not hit that and then heads up. Maybe it overshoots this a little, but not hitting that. If it hits that and starts heading down, then it's the 4109.8 trend factor down 4, where you can make that 100% buy there for your stake. So there's some pretty formidable support levels before it gets to that retracement, 4243.12 right here. The weekly diamond extension bottom line perfect uptrend channel, 4262.37 for this week. Daily arc 4260, pitchfork 1, 4250. So yeah, that's a tough call, but just keep buying all around in that area. And if we do get the bounce to the upside, then we'll take that as it comes and analyze that at that time.